demystify, learn. DQ Learning. Only on Bloomberg Quint.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Well, there's lots to tell you about this morning, so let me start with the headlines. First up, markets in Asia have opened lower following an overnight plunge in US stocks, where the Dow fell more than 400 points and Treasury yields reached the 3% mark for the first time in 4 years. KKR-backed Radiant Life and Manipal Health have made new binding offers for Fortis Healthcare after its board said that it would only consider binding offers. A tax write-back of 464 crore rupees has helped Bharti Airtel post a surprise profit in its fourth quarter. And Wipro and UltraTech Cement are the two nifty companies that will be reporting their numbers today. Well, let's turn to the international markets, and clearly big sell-off in the US markets yesterday. The yields on the 10-year benchmark Treasury note went past the 3% mark for the first time in 4 years. The Dow lost 500 points, over 500 points in early trade before gaining back some ground. And the sell-off was accelerated after industrials bellwether Caterpillar Incorporated essentially said that its earnings in the first quarter would be as good as it gets in the rest of the year. Abigail Doolittle of Bloomberg News has this report.
Stocks were sharply lower in Tuesday's Wall Street session. On the close, each of the major averages down more than 1%. This after opening higher, so there was some decent intraday volatility on the session. Now, relative to the Dow and the Nasdaq, both of those indexes fell by about 1.7%. The S&P 500 did a little bit better, down 1.3%, but still, that's a pretty decent decline. And relative to the Dow, it was the Dow's fifth down day in a row, the longest such daily losing streak since March of 2017. So some back-to-back bearish action happening for the Dow and the Nasdaq, for that matter, 4 down days in a row. Now, relative to the Dow's underperformance on the day in those 5 down days, lots of weakness for the industrial sector on the day. In fact, Caterpillar was a big piece of the day. The stock had been higher, up more than 4% in the morning on a very strong first quarter earnings report. But then during the conference call, management made an oblique comment that led some investors to believe that perhaps the first quarter was going to be the best quarter of the year. That was one interpretation. Those shares fell on the close, down more than 6%, its worst day since 2016. 3M, another big drag on the industrial sector, down more than 6%, its worst day since 2008 after the company did shave the high end of its profit outlook for the year. Investors not liking that. Tech was another weak sector, with Google, Alphabet really weighing the sector down more than 4.5%. They put up a very strong first quarter, but investors not liking the rising traffic acquisition costs. In turn, those shares traded lower, weighing on the entire FANG trade. That means Facebook, Amazon, and Netflix, in addition to Alphabet. And of course, Facebook reports on Wednesday, Amazon on Thursday. So there are lots of jitters this earnings season as many companies are beating estimates, but there's some nuance to the quarter that investors are not liking. So jitters that could be true, too, for some of these other companies going forward. And then finally, from a macro standpoint, very interesting is the fact that yields rose on the day. Very briefly in the morning, the 10-year yield did touch 3% for the first time since 2014. Rising yields, of course, could call high valuation or valuation into question for stocks. And for that reason, rising yields could have been a macro driver for the declines that occurred in Tuesday's Wall Street session, which overall had strong tones of risk off. In New York, Abigail Doolittle, Bloomberg News.
All right, and it's that 3% yield that we're focusing on. The US 10-year yield, as we've already told you, hit the 3% mark for the first time in 4 years, something that's been on the cards for quite a while now. But higher Treasury yields have implications for markets in the rest of the world, including ours, particularly on account of what they mean for capital flows. Now, to talk about the key drivers behind the recent rise in yields, here's Kathleen Hayes of Bloomberg News.
You just have to look at the U.S. stock market in the last 24 hours to see how seriously investors are taking this. 10-year yield has not been at 3% in 4 years. And, of course, once you break one key technical level after another, the door seems often to be open to ever higher moves, in this case, higher in yield, lower in price of bonds. Let's look at the drivers of this sell-off. The Federal Reserve is at the top of the list because the Fed is hiking rates 2 more times this year for a total of 3, maybe 3 more, some people are saying, and similar moves next year. How do you keep yields low at the long end if the short end is rising? A torrent of Treasury supply. That's how we will pay for Donald Trump's stimulus. The tax cuts, more bonds being sold. That also makes yields potentially rise higher, prices fall. Inflation is seen rising. Commodity prices have broken out. And in the background, the Fed balance sheet continually shrinking, not the main driver, but certainly all other things being equal, this is on the list. Let's look at a really cool chart from our GTV library. And what it shows is it puts what's happening right now in the past few weeks and months into a decades-long perspective. And the question is, we've had a 30-year bull market in bonds. Does this show us that it's over? Look at that yellow trend line going back to about 1985. You can see now that the white line, the 10-year note yield, has risen above it pretty smartly. That looks pretty definitive, doesn't it? Briefly hitting 3% in trading in the U.S., now just under that level. What does it mean? Why do we care? Well, first of all, let's just look at the domestic economy in any country where yields are rising. You got mortgage rates. They're already moving considerably higher in the U.S. That could hit housing. Numbers still looking pretty good, but that's one factor. Increased business borrowing costs, small, medium, corporations. That could make a difference, too. Stronger dollar, we've seen that. That can hit your exports. And it serves as competition for stocks. Higher bond yields look pretty good at some point compared to dividend yields. But it is good for savers. You can finally buy a bond and make some money on it. And remember, falling stocks today put a lid on this bond sell-off. J.P. Morgan sees a 10-year topping at 3.15% by the end of the year. Goldman sees a move to 3.25%. That's not the end of the world, many would say, but it definitely is a higher yield.
Well, all points that people in India are quite conversant with regard to bond yields. But let's move on now. U.S. President Donald Trump has said that he will be meeting North Korea's Kim Jong-un very soon, and he called Kim honorable. Listen in.
We are going to be having a meeting with Kim Jong-un, and that will be very soon. We have been told directly that they would like to have the meeting as soon as possible, and we think that's a great thing for the world. That's a great thing for North Korea and South Korea and Japan and France and everybody. So we're having very good discussions. Kim Jong-un he really has been very open, and I think very honorable from everything we're seeing. Now, a lot of promises have been made by North Korea over the years, but they've never been in this position. We have been very, very tough on maximum pressure. We have been very tough on, as you know, trade. We've been very, very tough at the border. Sanctions have been the toughest we've ever imposed on any country. And we think it'll be a great thing for North Korea, and it'll be a great thing for the world. So we'll see where that all goes. Maybe it'll be wonderful, and maybe it won't. And if it's not going to be fair and reasonable and good, I will, unlike past administrations, I will leave the table.
Well, let's take a quick check on the Asian markets, and they've predictably opened lower after the big sell-off in the US, but not to the extent that you would imagine. The Nikkei in Japan is trading with cuts of just about 0.4%. The Chinese benchmarks have also opened lower. The Hang Seng is down about 0.7% as of now. But let's turn to the Indian market. Jayesh Khilani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Jayesh, first to you, how's it looking? What's the SGX indicating?
Morning, Alex. So it's looking absolutely in line with what the global cues were. If you have a look at the SGX Nifty, that is indicating a gap down opening of about 50 points. Just a short while back, it was actually trading about 85 points in the negative. So one can say, has recovered from the day's low. But if you have a look at, some of the other cues in terms of the ADRs that we got, closed largely mixed, but, there were more losers than gainers. So we had Infosys and HDFC Bank, which are the top losers in trade. declined more than 1% each. As far as the gainers are concerned, if we can have that one, so we had ICICI Bank and Dr. Reddy's, which actually gained more than 1%. Now, in terms of the commodity space that we track, if you have a look at crude oil prices trading absolutely flat, but this is on the back of a more than 1% decline overnight for both benchmarks, that is the WTI and Brent that we got for ourselves. So Brent is trading below the 75 mark and WTI trading below the 68 mark. Now, if you look at the base metal space, that is where we got more cues in terms of the rates over there. So the index itself declined for the 4th consecutive day, largely led by aluminium and nickel, which declined about 2 to 3% each. There was only one gainer, or we had 10 also in gainers, but copper gained about 1%. If you look at the Shanghai Futures Exchange, we have opened on a mixed note where aluminium and steel are trading negative, while we have copper, which is positive, and zinc, which is absolutely flat. As far as the gold prices are concerned, they have actually climbed back to the 1328 to 1330 mark and snapped their 3-day losing streak. If we can have a look at the fund flows that we got as of yesterday and for the month, so the FIs have sold nearly 700 crores worth of equity yesterday, while the DIs bought more than 500 crores. The trend, however, continues for the month itself, where the FIs have sold more than 4,000 crores and the DIs have pumped in nearly 6,500 crores. Now, in terms of the key indices that we got, so the Nifty Bank actually, or the Nifty Index actually closed positive, about 0.3% in the green. However, the mid cap and the small cap index not so much, so they declined about 0.2 to 0.4%. Now, if you look at the gainers, the sector gainers that we had, there was not much to go by, but the Nifty Energy Index in fact managed to climb more than 2% for itself. As far as the losers are concerned, no surprises with the Nifty Metal Index given what the cues were yesterday. So that declined about 2%, and so did the Nifty IT Index, which also declined 2%. Now, if you look at the VIX Index, something interesting going on over here. That actually declined about 9.5%, and it saw the biggest slump that it was since the month of Feb earlier this year. So, we'll have to wait and watch, especially with expiry playing out yesterday. If we can have a look at the last one, which is the contribution, so you can see that what led to the 80-point gain on over on the left side. So we had Reliance, which gained, HDFC and ICICI Bank also contributed positive, while we had Infosys, Hindalco, HCL Tech and Medanta, some of the commodity names, no surprises over there, that actually led the losers. But Agam, what's happening with the VIX and expiry tomorrow?
Well, consolidation continues. We're looking at an uneventful expiry so far, at least, Jayesh. Of course, we do have 2 entire sessions left for expiry. That said, as you can see from here, rollovers certainly have picked up when it comes to the Nifty, and we're looking at more accumulation as far as the April futures, or rather the May futures are concerned. On April, on the other hand, is looking at unwinding. But for now, we have seen more unwinding in comparison to addition in the May futures. It's the same for the Nifty Bank futures as well. But the rollovers currently standing at 31%. It's picked up again, and we are looking at a substantial amount of addition towards May. And overall, considering the fact that we really haven't seen too much move in the indices, we are likely to see this picture improve as we move into the next couple of sessions. A decline of 9.5% for the WIX. It's now well below the mark of 12. And of course, there are a lot of changes in stocks, so we are looking at something like a Wockhardt, which has entered the ban. On the other hand, several counters such as Jet Airways, JP Associates and TV18 moving out of the ban. So expect regularized trade as far as these futures go. And that said, we're looking at fresh longs coming in GMR Infra, and we're also looking at fresh longs in something like an ICICI Prudential. So plenty of stocks out there, and once again, all eyes will continue to be on earnings, Bharti Airtel specifically, which can move the index, and on the other hand, Wipro, where we are now expecting its earnings later on today.
All right, thanks so much for that, Agam. Let's move on to the big updates, or updates actually. The battle for control of Fortis Healthcare intensifies, and 3 of the bidders, and that's IHH, Radiant and Manipal, have all revised their offers. Sajith Mangat joins in on the phone line with more details. Morning, Sajith. You've been through those offers. What are the key highlights that we're looking at?
The new offer that came in last evening, Radiant was the one which has come up with revised offer. It is pretty much partial binding offer because Radiant is more interested in buying out the Fortis Mulund Hospital. As part of the revised offer, what it has offered is that it's willing to value Fortis Mulund hospital at an enterprise value of 1,200 crores, which will include 680 crores of immediate cash. For what Radiant would be giving is cash not only for the Mulund Hospital, but also the cash that will come to Fortis Hospital through stake that is held in RST assets. It also plans, the proposal also talks about hiving of SRL separately and valuing SRL at 4,000 crores. It expects it has the appraisal value of Fortis to be a 170 rupees per share, and if 4,500 crores, the share price, appraisal value goes to 175 rupees per share. Radiant is also looking at, hiving off the entire hospital business, which is excluding the Mulund, or into a separate company, and then coming out with an open offer for the new for the shareholder, existing shareholders.
All right, it seems that we're having some trouble with that phone line. We'll come back to that story, but for now, let's do a check on the rupee and the bond market from the last session. The rupee snapped a losing streak that ran into 6 days to end higher by 10 paise at 66.38 against the US dollar. That was likely on account of fresh selling of the American currency by exporters and banks. Now, the bond market also witnessed a rebound, with the 10-year benchmark yield falling to 7.68% from 7.74%. All right, with that, let's shift focus to the commodities space. Jayesh Khilnani joins in with all the updates. Jayesh, there was quite a move in the crude market yesterday.
Morning, Alex. That's right. If you look at the early Asian hours, crude is trading with a slightly positive bias, but that is on the back of a more than 1% decline for both benchmarks overnight. So WTI and Brent both closed, more than 1% lower for the day. A couple of reasons that we are picking up for this decline. One is that French president had proposed a new deal with Iran to contain its nuclear program and keep the US on board. The other reason is that API is likely to report inventory buildup of more than 1 million barrels for last week. So we'll stay on top of that and get you the latest updates as well. As far as brokerages on crude oil is concerned, we have one from Stancy in which they have revised their average 2018 forecast for Brent oil to about $71 per barrel from the earlier 61 per barrel that they had. Now shifting focus to the base metal space, the index itself actually declined for the fourth consecutive day. It was largely led by aluminium, which posted its biggest two-day slump since 1988. Also, the aluminium freeze has started to melt down as Rusal shipments are, to begin very soon. As far as the other base metals are concerned, we had copper, which closed 1% higher, and that was the top gainer in trade. And nickel, in fact, posted its fourth day of loss by losing about 2%. Now, shifting focus to the precious metal space, two of the precious metals were in focus. One is gold, which actually snapped its 3-day losing streak, and the other one is palladium, which actually posted the biggest decline, 2-day slump in about 5 months, and has declined about 3 to 4% in the last 2 days.
All right, thanks for that, Jayesh. Let's move back now to Sajid, who joins us on the phone line. There was a bit of a problem there. Sajid, I think you'd mostly told us about the Radiant deal. What about the other two, Manipal and iChat?
The iChat has also come out with a binding offer, but it's a partial one, which is based primarily, immediate liquidity infusion of 650 crores, and the remaining would be a post due diligence. Manipal has been, upping his offer, and this would be the third or fourth time it would be revising his offer based on the kind of bid it has been receiving. I'm just, we are in the process of seeing through what exactly is the different part of it. But prima facie, they are looking at, revising the offer above 4,000 crores so that it becomes a little more interesting for the minority shareholders. Remember, the entire thing depends on the committee which has been formed under Deepak Kapoor to decide which is the best offer for the company and which is the best offer from a minority shareholder point of view.
Sajid, I was actually going to come to that, and we, of course, stay with the offers that have been made. But what essentially happens now? What is the timelines that we're looking at?
So, we were told, we understand that, all the offers were supposed to come in by the 25th, which is today. So that's why we've seen all the offers coming in between 3 or 4 people who have been participating in the entire offer. But now the committee will have to deliberate and see what is the best suited for Fortis from a shareholder maximization point of view. It also will look at immediate cash requirements or liquidity requirements. Remember, the entire Fortis deal depends or hinges on the fact that the RHT assets have to be bought out, and any new player which comes in will have to infuse at least 3,500 crores to buy out the RHT assets. Over and above that, there would be a liquidity requirement of 600 to 650 crores, which needs to be infused for the functioning of the company, of the hospital company. So these are the things which the committee would be looking at, and the committee comprises of some of the well-known names in the private equity and consultancy. So it's going to be a judgment call which the committee will have to recommend that. It's not going to be as easy as the first deal which Manipal did, because though Manipal had a backing of TPG, you have others now coming into the frame because Radiant has a backing of KKR, and you have IHS, which is also coming into the play now.
Right. All right. Definitely staying with that story over the course of the day. Thank you so much, Sajid, for taking the call so early in the morning. Of course, we're going to have to deal with all of the offers that have been made and go through them in detail, but we'll come back to that later. Let's go to the earnings very quickly. Bharti Airtel posted a surprise profit during the fourth quarter of FY18. Net profit of the country's largest wireless carrier fell 73% to 83 crore rupees, while revenue fell over 3% on a sequential basis. But must remember here that there was an expectation of a loss. Somit Sarkar sums up the key highlights from that earnings quarter.
Bharti Airtel reported an inline set of numbers in the fourth quarter of financial year 2018. Now, the company was expected to report a net loss. However, it surprised the street by reporting a net profit of close to 83 crore rupees, mainly on the back of a deferred tax credit of close to 464 crore rupees that the company accounted for in the fourth quarter of financial year 2018. Now, the company's African investment continued to pay off in this quarter also. Net profit from the African business surged to an all-time high of close to 699 crore rupees, while the EBITDA margins surged to 36%, which was also at its all-time high. Now, data consumption for the company also increased in the fourth quarter of financial year 2018, however at a slower rate. Now, data consumption stood at around 6.6 GB per user, which was up by around 24.5% compared to last quarter. Now, if you see the ARPU, that is the average revenue per user, now the company reported its lowest ever ARPU of 116 rupees per user, which was down by around 6% compared to the last quarter. Lastly, if you see the company's leverage ratio, that is net debt to EBITDA, was at its peak. The company's net debt was more than 95,000 crore rupees, and its net debt to EBITDA stood at around 3.23 times in the fourth quarter of financial year 2018.
All right, on to earnings that will be reported today. Cement major UltraTech will come out with its quarter 4 numbers today, and high input costs are likely to weigh on the company's profitability. Nikki Michandani is here to tell you all about the details that you have to watch for. Nikki, over to you. Morning.
Morning, Alex. We're not expecting great set of quarter from UltraTech. Revenue is seen although growing by 30% year-on-year basis to a number of more than 8,500 crore. We're also expecting EBITDA to rise by as much as 15% to a number of 1,467 odd crore. However, we're expecting some sort of margin contraction in this quarter at a number of 17.2% as compared to nearly 19.4% that we've seen in the corresponding quarter of the previous year. Profit too is expected to take a hit by as much as 22%. In terms of other key metrics that we'll keep an eye out will be your volume growth, which is expected to be around 24% growth year-on-year basis on account of ramp-up of JP capacities. Also, EBITDA per ton, however, is seen declining by as much as 8% to a number of 839. Realization per ton, on the other hand, is seen up by as much as 5% to a number of 4,882. What goes behind the making of the numbers? Well, volume growth is due to the ramp-up of JP capacities and higher finance costs, and along with that, depreciation of JP asset is expected to weigh down on the bottom line performance of UltraTech. And also, combined with that, we also expected to see some cost pressures in terms of higher power and freight costs, which may have some bearing on EBITDA per ton for this company. Back to you, Alex.
All right. Thanks so much for that, Nikki. Now, Wipro will be the third major IT company to come out with its results for the fourth quarter. TCS and Infosys already have reported their numbers, but all eyes will likely be on the guidance for this financial year. Agam Vakil is here with all the street expectations. Agam, over to you.
Well, we're expecting, should I say, a lackluster quarter for Wipro, considering our expectations with respect to IT services revenues are a growth of around 2.5% quarter on quarter. Coming down to your margins, we are expecting a substantial expansion to around 16.8% against 14.3%, and net profit consequently could rise as much as 10.2%. But we have to remember the reason why the profitability numbers will look inflated is because the company took a provision or made a provision of around 317 crores in the previous quarter on account of the insolvency of one of its clients. And that said, that's the reason why on an adjusted basis we're likely to see EBITDA margins at around 17%. Now, when it comes to guidance for this particular upcoming quarter, we're expecting anywhere between -5% to 1.5%, and the reason for the subdued guidance is because Q1 is seasonally weak for Wipro specifically. And in terms of other key watchables, we will be looking for the company's plans in the digital arena, considering we have so much written about and spoken about, and of course the outlook on your legacy business and the budgets for 2018. Moreover, also some updates with respect to the banking, financial, energy verticals, and what Wipro can do in these some of these verticals. But on the whole, we're not expecting a great quarter for Wipro, and neither are we expecting any exciting guidance for the first quarter.
All right. Thanks so much for that, Agam. Now, Nikki is back with the stocks that you have to watch out for on account of them being in the news. Nikki, what do you have for us today?
Sure, Alex. The first one that we're tracking is Hero MotoCorp. That is on back of the company going ahead and hiking the prices of the two-wheeler by as much as to 625 to offset the input cost pressures. Also, we are tracking Gokuldas Exports, where the company's board of directors have approved a QIP issue at a floor price of roughly around 90 per share, which implies a 4 to 5% discount from its current market price. In our list is also Bharti Infratel. Now, this one is ET exclusive. It says that Indus Towers is set to merge with Bharti Infratel in a deal which is expected to be announced today. ICICI Lombard, this stock is also expected to be in focus today. The race to buy Star Health Insurance apparently gets a little more intense because Westbridge Capital and Rakesh Jhunjhunwala, which had earlier teamed up to buy this asset, are now expected to match up ICICI Lombard's 6,500 crore offer. In bulk deals, we are tracking Advanced Enzyme, where the promoter has offloaded 2.1% stake in the counter. Ajmera Realty, again, where the promoter has offloaded 1.4% stake. In terms of earnings, we have Persistent Systems, not good set of numbers. Revenue down by 5.1%. The EBIT is down by 32% for this counter. Another counter that we're tracking would be Raymond on back of earnings. Steady set of numbers on the face of it. If you look at the EBITDA, that's risen almost 32% for this company. Separately, the board of directors of the company have decided to foray into real estate business and have approved a 300 crore development plan for 20-acre land development in Thane. Back to you.
All right, thanks, Nikki, for that. And with that, we've come to an end of Daybreak. The sun is up and shining. Up next on Bloomberg Quint, though, is all you need to know. Thanks so much for watching and have a great day.